morning, good evening, good afternoon, students and traders and analysts, right? How is everybody? Happy Monday, Tuesday, Wednesday, Thursday. Happy Thursday today. How is everybody? Hopefully you are glad and honored, hopefully, if you watched yesterday's lesson, the professional trader secrets that that nobody's going to tell you, right? Hopefully, I mean, I love this job, being a coach too, but still, I work hard, I'm making a great effort, I put a lot of work, for you to understand, alright? So I hope you appreciate yesterday's lesson, alright? Yeah, I have different groups on the Advanced Institutional Trader program. By the way, if you're one of them, if you are 3 years in the making, 4 years in the making, 5 years in the making, you know everything about the fundamentals of the Forex market, give me a call. Say hello, send me an email, you have on the email, mikefxboss@gmail.com. So I hope you appreciate yesterday's lesson. Okay, it's not going to happen every week, but I'm going to send it time to time for you just to see, alright, this is me, and I'm thinking like a retail trader, and oh gosh, this is the institutional way of thinking, Nobody says right or wrong, nobody says, oh, that those guys are better, this is not it. But if you're a retail trader, you can hopefully say, oh my gosh, this is how I'm thinking, and I can understand why I'm not making it, why I'm not consistently profitable after 2 years, 3 years, 5 years. And finally I can see the gap, and I can understand that I need to bridge the gap to go to this side, which is the institutional trader way of thinking and understanding how business is done. Yesterday's video already explains many of the things and the concepts, that probably most likely you never heard about. Like that, making money in the Forex market has nothing to do with you being right or wrong. It has absolutely nothing to do, and a lot of those myths, right? Because we tend to, as a retail trader, remember, I'm not arrogant and I'm not judging. I'm trying to explain to you, I'm a retail trader, and because I lack education, I'm going to personalize trades, and I'm going to think as a retail trader that if I am making some money, I have 2 winners in a row or 3 winners, I automatically start thinking that, oh, I'm doing this strategy is working and I'm doing the things in the right way. And hopefully the yesterday video demystify, I'm not sure if this is the correct word, this myth. And on the other ways too. As a retail trader, lack of education, you might be thinking, oh, I have 3 losers in a row. This means that I might be doing something wrong, or that the strategy doesn't work. Okay, so just this as a quick introduction. By the way, my name is Mike, the FX boss. Hopefully one day is going to be your boss or coach or whatever. This is the Professional Forex Trading Course 101. Never forget, trading is a learnable skill. And today we are going to do a recap, and we are going to try to find the euro-dollar trade, right? Shall we? Never forget, this stream is not trading or investment advice. We are here to learn. And remember, I'm moving the mouse, if your way is not working for 2 years, 3 years, 5 years plus, if your way is not working, why don't you try mine? Give it a chance. Just try. Alright? Because I'm not sure if it was Brian Tracy on Jim Rohn, they said time is going to pass anyway. 5 years from now or 2 years from now, you are going to be somewhere. The question is where, right? So without further ado, let's go to the charts, and I'm going to open euro dollar, double click, euro dollar on trading view, and there you go. Okay, so we are going to do breakdown analysis of euro dollar based on the knowledge that you have so far. Alright, like a recap, and then we are going to try to find an entry. So monthly bands, market wave, short-term trends, trend lines. You've learned so far, as a beginner trader, you've learned so far how to use 4 tools to make a good analysis. This is all practice, you know, and to make sense out of the forex market, specifically to make sense on euro dollar. Like, oh, what is happening and what's the prediction, and do I have a chance to enter the market based on logic, something that makes sense. All right, if you want to write this down, all right, let's write down this quote, everybody, right now. You know, my trade must make logic to me. My trade must make logic. So maybe my English, it's not grammatically, so my trade should be logical. All right, my trade must make sense to me, maybe another word, so that I can understand why I won or why I lost. Does this make sense? Boss, can you repeat please? Absolutely. My trade must make sense to me. It must be logical, common sense, so that I can understand why did I win on the trade, or I can even understand why did I lose. Okay? Loser or winner is going to make sense to you. Isn't this good news, everybody? Does this make sense to you? Even this is the better question. Does this make sense to you? This is one of the gaps you must come to from a retail trader way of thinking, that you believe that everything is the same and is the strategy's fault, you know, and you don't care, to an institutional, to a professional trader that understands completely. He or she can explain to you why he or she lost or why he or she won. And they can explain to you with logic, to the point that you, as a beginner trader or a newbie, you know, or your grandfather is going to say, oh yeah, you know, that makes sense to me. All right, that's the goal. And this is the practice, all right? So we are on euro dollar monthly chart. Do this with me if you've never done this before. Okay, euro dollar monthly chart. I'm using FXCM as a data provider. Okay, if you go on trading view and you click in here with the mouse, you have different data providers. See? Okay, I'll go with FXCM. Why? Nothing special, but some of the data providers have too much data. So the monthly bands, if I'm using FXCM, and everybody all around the world, so all the hedge funds, all the investment banks, all the brokers, all the family offices, whatever, all the retail traders, they are looking at the same data. Makes sense, everybody? So if I have a chart like, I believe it's ICA, you know, not a good example, so let's go back to FXCM. Maybe AUD/USD, and if I go to ICA, see everybody? This is the example, you know. Instead of you having the monthly band magnet out, instead of you having the monthly band up in here, the lower band is okay, it's alright. But instead of you having the monthly band up in here, you are going to, or you might put the upper band on the monthly chart up in here. So me, and now I'm speculating because I don't know, me and 95% of other traders, we are going to buy the market down here and short the market up in here. But you, because you have another band, because ICE has more data, you are going to say, oh, you know, we have more space to go. So I'm going to short the market up in here. You are going to still try to go long. Alright, so this is the reason why I have FXCM. Alright, so if I go back to FXCM, you know, well, it has the same, alright? It's okay, but you got the idea, hopefully, right? Or maybe let's find somebody who has maybe Oenda. Okay, so see now some data providers, they have too much information, some are lacking some information, alright? Exactly, so just try to use FXCM if you want, okay? Or if you're going to choose something else, just try to compare few of those and try to figure out, okay, is this chart on the monthly, you know, more or the same? So do we have the same? If I would be in Japan or Jamaica or Finland, would we see the same chart with 8-cap data provider, FXCM data provider, Oenda data provider, Saxo Bank data provider, and so on and so on and so on? Alright? That being clarified, let's go back to euro dollar. Let me drink a little bit of coffee. So we have the upper band, we have the lower band down in here. Okay, so you should have the same. Do this with me, and I'm going to delete again. I'm going to delete and I'm going to explain again. So we've learned about the market wave, okay? And we've learned that the market wave, also called market structure trends, starts with an extension and then it goes into a retracement and then it continues with the next extension. And extensions by default are bigger or longer compared to the retracements, okay? And we also clarified, you know, I've told you that on the monthly chart you are not able to see the change in the short-term trend. So the monthly chart is the exception to the rule, but it doesn't matter because I'm going to start with the upper band. This is the last time the market hit the upper band, and we can see it's gravitating down to the lower band, right? So I'm going to go high, you know, extension, high to low, low to high, and it's a lower high, that's the retracement, high to low, and it's a lower low, that's the extension, low to high, and it's a lower high, that's the retracement, and now high to low, this is not a lower low, that's a lower low, right? But you see 1, 2, 3, so in this downfall, this is the lower low before the market goes into retracement. Make sense? In here the market doesn't go into retracement, in here the market doesn't go into retracement, in here the market retraces to the level that is going to make another lower high. So again, high to low, low to high, and it's a lower high, and then high to not that low, not this low, it's a higher low, this is the low. Alright? Now we have the market wave. Let's click on this in red, right? Now we have the market wave, the market structure trends on euro dollar monthly chart. What I'm going to do, I'm going to right click, sync in layout, right click, sync in layout, the market wave 2, right click, sync in layout. Okay? And that's it for the monthly chart. Okay? So what can we conclude? What is the conclusion? Monthly band, it's the long-term view of a currency pair, and me as an analyst, I can see, alright, it hit the upper band, so long-term this market is going to gravitate, long-term on the monthly, it's decades, alright, is going to gravitate down. Is the market gravitating down? Yes, boss, yes it is, right? Oh, how can you tell? Well, look at the market structure trends. Look at the market structure, also called, I prefer to say market wave. Alright, look at the market wave. Is it making higher highs, higher lows, or is it making lower lows, lower highs? Somebody's saying, oh, this is a no-brainer. Exactly, so far so good, right? Now, let's go on the weekly chart. And so this is the daily. I need to go to the weekly chart. There you go. Now, everything is on the chart already. And I missed something, you know. There is another tool that we learned. So what I didn't chart? There is something that I didn't use. What's the tool that I did not use on the monthly chart? Exactly, the trend line. So high, the highest high, the starting point of the downtrend, the starting point of the down market wave. Everything starts from the monthly bands. Cardinal rule for the Forex, one of the cardinal rules of the Forex course 101, you know, the beginner trader stuff, talking about monthly, weekly and daily, everything starts from the monthly band, alright? So if the market hit the upper band, I need to find the highest high, the absolute high, the starting point of a downtrend, which is here. Now I'm going to extend the downtrend line, and remember, I must not break or cross any tails. I'm going to do this in red. It's a downtrend, right? So this is the correctly drawn long-term downtrend line. You can also extend it if you want, all right? So I connected this high with this high, all right? Left click on the downtrend line, right click, sync in layout, done. Now we are done. Euro dollar weekly chart. So most of the things are on the chart already. Now what I'm going to do on the weekly, I'm going to just put rectangles to measure, you know, relevant highs and lows. What are relevant highs and lows? Relevant highs and lows are the border lines between extensions and retracements, all right? So market wave first, relevant high, relevant low, relevant high, relevant low, relevant, of course, lower high, relevant lower low, relevant lower high, relevant lower low. Okay? What does this mean? This market long term is down until it breaks the relevant high, exactly. See, with this knowledge, if you would knew that this market is down until it breaks. So this is the example, you know. If you knew that this, so when I say if you knew, it's the logic behind what you are doing, it's the logic behind what you are learning. So if you knew that this market is down, talking about the long-term direction, unless it breaks this relevant high, look how much money on the demo account first would you make. But you know, this is when I'm telling you that when you win as an analyst first, when you win and when you lose, you should be able to explain to yourself first, you know, all right, this is why I won, this is why, and also to explain to yourself first, you know, why did you lose? You know, I lost, all right, but I lost because of this and this and that. So if I would be buying up in here, and of course I would lose, you know, I would look at the chart and say, okay, so I lost as an analyst. I lost because I was buying against the market wave. This would be one that I can show on the chart, tell my traders, you know, or my grandpa, you know, grandpa, hey, what do you want? I lost here because I went against the relevant highs and lows. So the loser makes sense too. You know, do you want to improve your results quickly? Make sense out of the losers with logic and stop doing them and start trading like this, you know, make sense? I mean, this is common sense, right? Boss, I don't get it. Talking about the common sense. If we talk about trends, right? If we talk about trends, this is an uptrend, just an example. If you short the market, and day traders do this, you know, but it doesn't change the fact. If you, as a day trader, if you short the market, are the probabilities, the probability game, are the probabilities stacked against you or with you? Boss, what do you mean stacked against you? When you look at the chart and you know that the extensions are bigger and longer, so when you go against the trend, you are going against the extension of the trend, are the probabilities of this trade lower compared to if you would be buying as a day trader? Ah, got it. Or boss, can you repeat please? That's the trend making higher highs, higher lows, alright? The extension is bigger or longer compared to the retracement. We've learned this. This is how this market moves. There is no question about it. And don't let anybody tell you otherwise. Okay? This is how this market moves. And period, end of story. Now, sometimes when this uptrend, it's on the daily chart, you know, and start to retrace on the daily chart or the 4-hour chart, you know, it's in a retracement, which is normal, extension, retracement, extension, retracement. After the extension, what must come? A retracement must come. After a retracement, what must come? It's not should come, it's not could, it must. This is how this market moves. And this is specific for the Forex market. Don't mix with stock market and crypto. Alright? So, when this uptrend starts to retrace on the daily example, or the 4-hour chart example, a day trader who operates on the 15-minute chart example, or 5-minute chart, 5-minute chart, he or she is going to short the market. But because we are in an uptrend, and there is an uptrend line, the same day trader who is shorting the retracement because he or she is operating on the smaller time frames. When the market changes direction and it goes into a next extension, those guys are going to reverse position. So they're going to short the market for a few days, and then they're going to buy the market for the next days. Make sense? Alright, so here is the question. When they are shorting the retracement, and you too, probability wise, are the probabilities working against you compared to extension trades? Exactly. The correct answer is yes. This doesn't mean that you cannot win, but you must be more skilled. Okay? So you're going to hear me and everybody, oh, you lost because you went against the trend. Or, strategy rule, don't trade against the trend. Don't trade against the short-term trend if you want. There is no right or wrong on the strategy. Okay? Now, that being said, we have the market wave on euro-dollar weekly chart. So this is the relevant high and this is the relevant low, and we can see, everybody, can't we see the change in the short-term trends? Yes, we can, right? So starting from this low, the relevant low, I'm going to start to chart. I'm going to connect the short-term trend now. Boss, is this how we should be doing things? Yes. As a beginner trader, as a beginner analyst, growing up, this is now the process. Alright? So I'm going to go here and low to, remember, a trend is a sequence of highs and lows. So low to high, high to low, low to higher high, high to low, higher low, low to high, higher high, high to low, higher low, low to high, higher high. But then, so until here we're going to color code this in green. But then, still continuing, high to low. Alright. So it's a now it's a lower low, right? So I'm trying, as an analyst, I'm trying to figure out, you are not a trader yet, if you are going to listen to me and let me coach you, alright, for 1 year, you are not allowed to call yourself a trader. Alright, and we talked about this already. Prove yourself on my FX book or equivalent. 6 months of consecutive profits. Boss, 6 months too much. Alright, 3 months. Alright. Okay, fair enough. Talking about being fair, fair enough. Now, here the game starts to get interesting. Alright? And so this is a low, right? Now if I keep connecting, so this is not a high. If I keep connecting low to high and, okay, low to high, high to low, low to high, alright? Now this game starts to get interesting. If I connect low to high, high to low, I'm going to tell you, but number one, I'm going to ask you, is this uptrend relevant? Is this uptrend relevant? Boss, how do I know? Well, the same way that we charted the relevant highs and lows on the market wave, we are going to do the same thing with the short-term trend, shall we? So relevant low, and we're going to change the color to blue. Now we are charting the trend, the short-term trend on the weekly. Relevant high, relevant low, relevant high, relevant low, relevant high, relevant low, relevant high. The relevant highs and lows are borderlines between extensions and retracements. Nothing special, nothing new. Now the market made a lower low. Alright? So to help you, what you are seeing this. 1, 2, you have 4 highs. 1, 2, 3, 4, and then you see this. Can you see it? So this low, it's lower than the previous 3 lows. So I can do something like this, maybe, you know. Alright? Now here is the question. Is this lower low relevant to the uptrend? And I'm going to give you the answer because, you know, maybe this is something new for you. And the answer is, well, yes, this low, it's absolutely a relevant low, you know, and it's relevant to the uptrend. Why? Because this low just broke the uptrend. I don't agree with you. How do you know? Well, we can. So do we agree that this is the starting point of the uptrend, this low? Do we agree? So if I extend an uptrend line and put it like this, and a trend line is a tool that confirms the trend, does this black uptrend line confirm the green uptrend? Yes, it does. So me charting the uptrend line, did I do anything wrong? And the answer is no, boss. Now, the next questions. Did the market break the uptrend line? Yes, it did. So, we're going to learn today a term called bull points, bear points. So the market was in a short-term uptrend on euro-dollar weekly chart. Now the market broke the uptrend line. So 1 point for the bears, and the market made a lower low. After the market broke the uptrend line, made a lower low. 2 points for the bears. Now, I beg you, download this lesson and hear me out telling you what I'm going to tell you right now. Okay? 20 times. This is how you're going to learn. Because this is pure logic. This is the mindset. This is the skill. Because the market broke the uptrend line, and because the market made a lower low, because the market broke the uptrend, this high, the green one, and this low, the green one, and this red line, this is the first down extension leg of a downtrend. Alright? Boss, can you repeat please? Absolutely. Because those are the reasons. This is the mindset, this is the skill, the understanding of what you are seeing on the chart. For you to make then the decisions, or I'm going to buy or sell with the highest probability as possible. For me understanding, alright, is this trade high probability based on my knowledge so far, based on my level, or is this a low probability trade? Okay? So one more time. Because the market broke the uptrend line, and because the market made a lower low, now what I see, and what I'm going to tell my trader is, oh, euro-dollar weekly chart, we are in a short-term downtrend. Okay? And yes, it's true, this downtrend is not, somebody's yelling at me, oh, but you told in lesson number 2 that to conform a downtrend you must have minimum 2 lows and 2 highs, when the second low it's a lower low and the second high it's a lower high. All of this is true and it stands. All good. Okay? So yes, the downtrend is not confirmed yet, but it doesn't change the fact that you have no uptrend anymore. And here we go many times with fights, you know, you are fighting with me and not you, maybe somebody, but some students in the Forex Course 101 private group, private mentorship of the Forex Course 101, the smartest comes along and says, no, I have an uptrend, you know, they fight with me, of course, it's all good, it's all good, this is how we learn, you know, and says, no, not true, I have an uptrend. I'm telling the student trader, you know, you don't have an uptrend anymore, why did you buy? Yes, I do have an uptrend, and I'm telling the guy, well, show me. And here she's going to show me this. And I'm going to say, yes, alright, so you have an uptrend, but what, the uptrend line break doesn't count anything for you? Doesn't have no meaning to you? Does have any meaning to you? And the market made a lower low. We also are going to disregard this, like we are still in an uptrend, so this lower low doesn't have any meaning to you as an analyst too? Make sense, everybody? This is what in the Advanced Institutional Trader Program we call homeostasis. The innate drive to stay the same. Alright? And again, I hope you appreciate yesterday's lesson, the professional trader secrets. Because we talk about exactly this. You are not, if you think like this, thinking like this is not a problem. You know, you could have learned in the wrong way, but you keep thinking in the same way, meaning you are not coachable. Make sense? Because you prefer to be right in your, I'm right because I know that I'm right, you know, and for me this is an uptrend. You're not coachable. I cannot help you. I got everyday calls and emails. No, boss, teach me how to make money. Boss, help me to make money. I can't unless you get coachable. What does this mean, being coachable? Accept. So number one, understand this is my job and my bad. Understand the concepts in the sense that they make sense, they make logic, you know, and then accept those concepts. Like this uptrend is no good no more. This uptrend is broken. The market did break the uptrend. And this is the first down extension leg. So if this is the first down extension leg, this short-term uptrend is what? What do you mean what? Is this short-term uptrend an extension or retracement on the, I'm going to help you, on the down market leg, on the downtrend leg? Very good. A retracement, of course. So why is this important and relevant? It's because I need to understand as an analyst that if this is the relevant high of the downtrend on euro-dollar weekly chart, and this is the relevant low of euro-dollar weekly chart, until the market breaks this high, this market is positioned to, there you go, see, not that difficult, it's positioned to go down, it's positioned to fall. And all of this sell it in between, you know, it's totally irrelevant. Make sense? What do you mean by irrelevant? It's not relevant for you to determine the direction. Alright? So You can chart, you can connect, it doesn't really matter. Alright? Now, we didn't learn yet, but if you would connect this low to this low and this low, and if you would connect this low with this low, and you would short the market, those are counter trend line breaks. We didn't learn it, we're going to learn. So if you would have the visual that this market was in an uptrend, but it's not in an uptrend anymore, it's in a downtrend, which is not confirmed yet, but nonetheless you have a trend line break and you would short it with confidence. Everything is there. I mean, you are going to learn more tools, but everything is there. You would short the market in here, you know. Now the market is retracing still, but you would make some pips and money on the demo account, wouldn't you agree? And this is pure logic. This is what we say, oh, it's common sense. And when somebody asks you, how do you know? You can explain. The market was in an uptrend, the market broke the uptrend line, and the market made a lower low. We are not in an uptrend anymore, we are in the first down extension leg, and this is the driving force, unless the market can do anything it wants, when it wants, for how long it wants, unless the market breaks this high. So potentially the market can go up and break this high. If the market breaks this high, then you have no downtrend anymore. And yes, those concepts apply to all time frames. Alright? Okay. So we are going to do what? We are going to right click, sync in layout, 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 and now we go to the daily chart. Before us going to the daily chart, we are going to go on the monthly again, just to remember, okay, what do I see? I see the market gravitating in a down market wave, down market structure with the down trend line from the upper band. So, decision, trading, right? Trading, you are just to remember you are trading on a demo account, not to make money, but for you to understand how this market works. This is your first year. You have a demo account, you're an analyst, you know, if you are willing to listen to me, and you are trading, and hopefully with time, making consistent profits. You're going to have losers too, make no mistakes, but making consistent profits with the sole purpose of understanding. Alright? Pen and paper right now, or you have a recording you can download. I cannot, so it's a concept for you. Let's write down. I cannot build my strategy unless I don't understand how this market works. Boss, can you repeat please? I cannot build my strategy unless I understand how this market works. Does this make sense to you? I mean, this is common sense, right? We don't need to debate, and it would be, if you ask me, and I'm not that intelligent, believe me, you know, it would be foolish for me to build a strategy or buy a strategy or borrow a strategy without having a clue on how this market works. It would be foolish, you know? You need to learn the rules of the game first. You go to soccer, football, tennis, bowling. Don't you need to learn the rules of the game before you go to play the game? Of course, right? Well, the same logic applies here. You know, I mean, we're all the same. We're on the same boat. I wish that would be that easy that I would just take a strategy or buy a strategy and I would make money. It's a fairy tale. Doesn't work like this. It doesn't exist like this. All right. So this is my analysis so far on the, and yours should be true on the monthly. Then going to the weekly. Zooming out, you are going to tell your trader or yourself, your retail, you know, euro-dollar weekly chart, so euro-dollar monthly chart plus euro-dollar weekly chart. Oh, the market is below the downtrend line, so direction is down. We have a down market wave, down market structure trends, so the direction is down. Plus the market on the weekly stopped retracing, look at the mouse, stopped retracing and start extending. It's just a start. I cannot say, oh, we are in an extension. I don't have a confirmed downtrend yet. But we are starting an extension based on what we see on the chart, right? This is the thought process. Boss, what is going to happen if I don't do what you tell me? You are going to speculate. You are going to speculate. You are losing money because you are speculating. You are trading from what you think is going to... You trade from what you think is going to happen. Compared to an institutional trader who does not speculate. We don't speculate. We trade based from what we see. This concept is going to take some time for you to understand or maybe accept, you know. All right? And plus, what can I tell my trader, you know, with the all highs and lows? I can say, all right, if this is the red one is the down extension leg, you know, I can say to my traders, well, on euro-dollar weekly chart, the market also went up, but then it stopped going up, stopped making higher highs or higher lows, and now it's going down. So now we have a confirmed short-term downtrend. Yeah, let's not complicate too much. Now we do have a confirmed short-term downtrend. Don't we have? Do we? Don't we? Don't we have a confirmed short-term downtrend? In relationship to the down extension leg? Yes, we do. Alright, so we can right click and sync in layout. Boss, but it's going up. One candle means nothing. Alright? It's going to be a title of my new book. One candle means nothing. Boss, can you explain this? The same logic applies. Relevant high, relevant low on the short-term downtrend until the market breaks this relevant high. The short-term downtrend on euro-dollar weekly chart is down. Talking about the retracement and extensions, same logic. Until the market breaks this high, this market is in a down extension. Alright? So even there is a bullish candle and the market is going up, this is a retracement. Not a retracement on the down market leg, look at the mouse, not the retracement on this down market wave, but it's a retracement on this short-term downtrend. This one. Boss, this is too much information, my head hurts, you know. Download the video. We're going to do this countless times anyway. You know, we're going to do analysis and trying to make sense. Give yourself, pat yourself on the back, give yourself a year to learn. I'm telling you, give yourself a year to learn. Especially if you're a beginner trader, don't expect that you're going to get it in 6 months. You won't. It's too much information. There is a reason why 90% of world population, and we're talking about smart professionals, 90% of doctors, lawyers, surgeons, airline pilots, mechanical engineer, software programmer, whatever, you know, they are not making it. All right? Never forget this. Never forget this. Give yourself a year to learn. All right? Otherwise, it's going to be 2027 and you're going to think and say, oh, I need to go to the boss YouTube channel and start to rewatch Forex Course 101 again. You're going to waste time. Alright? Give yourself a year to learn. I'm telling you. So this is a retracement on this short-term downtrend, which is part of the extension of this relevant high, relevant low downtrend. So you and me, we are predicting, you know, now this is speculation, we are predicting the market in the future, I believe, based on the downtrend line, down market wave, uptrend line break, I believe that, I don't know how, I don't know when, but I'm predicting that this market in the future must make a new relevant lower low. Alright? And before I know, congratulations to you. Alright, give yourself an applause, you deserve this, pat yourself on the back, you know, it's a lot of information. You are still studying, you are staying with me. Alright, so now on the daily, a lot of things are already here. Right, now on the daily, this is the relevant high from the weekly of the downtrend, which is not confirmed. This is the relevant low on the weekly, from the weekly, alright, of the short-term downtrend, which is not confirmed yet, alright, and this from the previous lessons anyways. So now what can we do? You know, what can we do that we didn't do yet? So if this is the relevant high of the short-term downtrend, and if this is the relevant low of the short-term downtrend, and this is the extension of this short-term downtrend on the blue, alright? So some of you are saying, oh, but the market is up. Yes, now on the daily, now on the daily, we clarified that the short-term downtrend, the red one, you know, we are going to do the same. What we're doing, we're going from monthly to the weekly to the daily, and we are charting the relevant highs and lows for the specific time frame. This is what we're all doing. This is all what we are doing. So if those two rectangles are from the weekly, now talking about the daily, this is the relevant high of the down extension, alright, yellow, and maybe not yellow but blue. Do we have blue? Alright, so violet, you know, pink. This is the relevant low, this is the relevant high, and this is the relevant low. Those two 4 pink rectangles are just telling us that, oh, the market is in an extension mode, talking about the weekly downtrend, not confirmed yet, alright? And the market so far on the daily chart, now this goes for day traders on the 15-minute chart, 30-minute chart. You know, on the daily, I'm going to connect low to high, high to low, low to high, high to low, low to high, high to low, low to high. So we are still in a retracement. All right? Let's not complicate too much. We are in a retracement on the downtrend, which is part of the weekly downtrend, and these red lines represent the extension of the weekly downtrend, which is not confirmed yet. All right? So basically what you are seeing is the concept that you've learned, that this is market structure and those are the market structure trends. Make sense? So I'm going to do this green and this is going to be green too. All right? So this, oh, one more. My bad. I need to chart a retracement. There you go. And I need to chart. There you go. So this, in theory, now is this on the chart. Red short-term downtrend, red short-term downtrend on the daily chart. Market making higher highs, higher lows. It's a retracement on the downtrend. Market making higher highs, higher lows. It's a retracement on the downtrend. This market is positioned, talking about direction, this market is positioned down. All right? For us to make money as retracement traders, as day traders, the money was made down in this for the future lessons, but for us to be positioned in the best way, talking about probabilities, we are going to try to short the market. So go short, sell euro dollar. All right? Not right now, but when the market is going to start to do what? When the market is going to make lower low, lower high, lower low, and possibly break the uptrend line again on the retracement. All right? So we are going to short the market on the 1 hour chart, 2 hour chart, 4 hour chart, whatever. When the market is going to make lower lows, lower highs, on TradingView you can put a horizontal line like this and right click and add alert. And you put sell euro dollar. You put an alarm in here on this low, because when the market, and if the market makes a lower low, this is going to be the signal that, oh, we are not in a retracement anymore on the daily, we are ready to go into the next extension. And this next extension is going to be a structural part of this bigger downtrend. Remember that we are predicting for the market to make a new lower low from the weekly standpoint. All right. If you need private classes, send me private classes or personal mentoring or whatever. You know, if you need help with the Forex course 101, same story, send me an email. All right, I can help you. Otherwise, just practice. It's for free. All right, it's for free. It doesn't cost you. But give yourself a year to learn. All right. So I'm going, in conclusion, you know, a little bit more complex lesson, a little bit more longer lesson. In conclusion, what I'm going to tell my trader, or myself, being a retail trader, you know, not a trader yet, an analyst. I'm going to short the market when the market makes a lower low, or I'm playing chess with the market, or if the market breaks this high, then I'm going to reverse my positions and I'm going to see and re-evaluate. I'm going to redo all of this process, monthly, weekly, daily, and try to figure out if maybe there is a way for me to go long. Why, boss? Why? Because the market broke the relevant high on the red short-term downtrend. It's pure. I know it's a lot of information, you know, I know it. But when you're going to re-watch the recording for 3 times, 2 maybe not enough, 3 times, 4 times, and you doing this with me, charting, studying, you know, trying to make sense of what is going to get more and more and more clearer and easier. And you're going to figure out, oh, this guy is doing always the same. Exactly. Trading is a learnable skill. This guy is doing always the same. Yes. We are not trying to invent any hot water. This is common stuff. It makes sense, everybody? It's common sense. But it's also true that you must learn in the right way. Because it's easy to learn in the wrong way. Alright? In conclusion, if and when, and I believe, based on what I see, the market is going to break this low and make a lower low, then we are going to short the market. Alright? And if for any reason, in any case, the market breaks this high and makes a higher high, then I'm going to buy it. I'm going to try to find how to buy. Alright? Tomorrow we're going to continue from here and we're going to talk about stop loss levels and our rules to stop loss and take profits and risk reward ratios. Alright everybody, thank you very much for your time. Appreciate. I'm looking for traders, don't forget. I'm working with 2 asset managers. We have seed capital to give you. It's not a joke, real money. So learn well, give yourself a year, and see you back tomorrow, alright? Until tomorrow, stay strong and do all of this like a boss. Never forget, you are the boss of your own account. Okay? And this is no joke, everybody. Even you think, oh, I'm on a demo account, you know, I'm on a demo account. Treat it like a real account because it is. Make sense? Get a set. Before you do something, you must be something. Think about that. Okay? In any case, subscribe. You have below the subscribe button, and on here is going to appear a video on how to understand and chart market structure trends. Alright, this is Mike, the FX boss. See you tomorrow. Thank you. Bye bye.